in your applauses, I invite the speaker of this panel. Let me check my... So, Beatrice Dumitrașcu, CEO, Residential Division 1 United Properties. Oriunde. Fulga Dinu, Country Manager, CPI Romania. Oana Ijdelea, Managing Partner, Ijdelea and Associates. Sorin, Preda, CEO and Founder, Global Vision. Michael Jalbert, CEO, Forbes Global Properties. And Selman, Yalcin, Founder, Red Awards. So, welcome everyone. We are talking about the real estate landscape of tomorrow, trends that make sense. And my first question, it's an obvious one, and I want to ask each of you to share with us one important trend for the future, for the landscape of tomorrow, let's say the most important trend that you consider for the future. It's an open question. But please explain why do you consider that trend so important? Gentlemen, will you please allow me to start with the ladies? So, yeah.
Please.
Yeah, so Beatrice, please.
Usually, if I'm not stepping on the first chair, I'm asked the first one as anyway. So I'm happy to be here today. A lot of great insights. If we talk about opportunities and what is important, I'm representing a company that is developing real estate in Romania. We are the leader on the market right now. We are addressing to the mid-market and the luxury market segment as well. I think, for example, we are in Bucharest. Our main developments are there. And I think the most important thing that happens today is that the Bucharest is expanding. This is, I think, it's a key important information. Due to some reasons, we were discussing about predictability earlier, but this is not happening very often, reason why the city is expanding right now. For example, a lot of construction are going to appear near Bucharest, which is it's a game changer for the next few years, in my opinion. This is one point of view, at least.
Okay. Fulga, please.
Hello, everybody. Thanks for having me. When Raluca mentioned the idea about having this conference in New York, she didn't even finish the phrase, and I said yes, because I somehow feel like this bridge that you're displaying. I emigrated to the US in '96, and I went to school here, and then I worked here, and then 6 years later I disimmigrated back to Romania. With the hope that I would bring everything that I learned here in a country that was coming out from pretty much some dark ages. And I think that I'm blending what I learned here and the people's state of mind here, the positiveness, the bluntness, the the way of solving problems, the way of being effective, into the way of doing business in Romania. I now lead one of the largest real estate companies in Romania, commercial real estate. And if you ask me, just to get straight to the point finally, what I see as a trace coming in and that's important, and it's proven to be important in the past years, especially after the pandemic, it was being able to adapt and to change quickly. We changed the purpose of some of the buildings. We transformed them so that they kept producing money. I think that being creative and being able to adapt to the new times, including investing into AI, but for us in real estate, it's not. It's important, but it's not going to be a huge game changer. But it's going to benefit us a lot, but not that it's going to replace the people very much. But maybe the smaller menial jobs. But I think that was an important thing that we continue to produce money, and actually we increased our revenues post-pandemic in the office, when the offices were a bit touched by so there goes my answer.
Thank you. Oana, please.
Well, if we are to discuss about trends in general and forward looking on those trends, I believe that the word to be used in all respects is sustainability. Sustainability not as a target per se, but rather as a 360-degree process, which also is the main driver for all stakeholders, from consumers and buyers to investors to developers, and ultimately to government in shaping a state's policy and social concerns.
Okay, Sorin?
Yeah, I think there are a lot of factors remodulating the real estate industry as we speak, from the economical one to social, technological advancements, and last but not least, geopolitics factors. To us at Global Vision, after 20 years, I think, I would like to believe that we are capable of reshaping the industry in our own way. And honestly, personally, I think Global Vision for the next decade should be more than real estate. That's one reality that I see it, I feel it, and is pushing me to a new business model. And being more than real estate to us honestly means today an integrated platform of real estate, technology, and energy. And that's actually because the main trend as we speak is related to the idea of building green and sustainable. And I believe that you can only do that if you manage to develop other competencies, and if you develop competencies and you raise capital, you develop competencies, and you think integrated.
Thank you. Michael, if there is one trend that you consider the most important in the landscape of tomorrow in real estate, what is that and why?
Sure, thank you. Great to be here. Our specialty is really transacting business for high net worth and ultra high net worth individuals. We do it across 30 countries, 600 offices, 19,000 agents. And really, I see the future, frankly, exactly as I've seen the past. There are 3 levels of how you transact business in this strata. First, you have to have a relationship, and it's a very personal relationship with a buyer or seller. And a relationship can take a month, a relationship can take 10 years, but nothing happens until you have a relationship. First trend. Second is, when you have that relationship, it transitions into them asking you for advice. And then you become a trusted advisor. And only once you become a trusted advisor are you going to be invited in to be part of a transaction, either representing a buyer or seller. There's lots of things around building those 3 levels, those 3 steps, but they're not going to change. You have to know your people, you have to know your business. I will tell you, as we look across our 30 countries where we are and we're continuing to grow, real estate is probably 80% the same, the way it's transacted in every single one of our markets, which also means it's 20% different. And you have to have local expertise to understand those differences to be successful. So to me, while names will change, safety, security will change, growth will change, if you don't have these basics going forward, it's not going to work.
Thank you. Selman, please.
Yeah, I want to say the same thing as Michael said about local expertise. I mean, our company specializes in bringing people together, and we host the most exclusive events in New York, Chicago, Miami, and we're going to have one in Pittsburgh as well. And you have to team up with the local developers, owners, because they're the ones that knows the city well, and that's how they bring the value into the investments. I mean, right now, things change dramatically since COVID. People still not going back to the offices, and most of the office, commercial real estate is empty lots, and there's some developers that are looking into converting them, and it's not as easy. So to be successful in a city like New York, it has to be a partnership with local owners and operators here.
Thank you. The first panel was about technology, yeah? So I will ask your input on the technology side, let's say, since technology and innovation usually they go together, yeah? How do you, from your perspective, how do you see the digital transformation of your company or the real estate segment in general, since as we've learned, the AI is already here, and it should be getting very, very smarter very smart in a very short period of time. Michael, please, can I start with you?
Well, I think the pandemic, frankly, did a lot to really propel us into the next level of how we leverage technology in this industry. You know, I'll give you an example. In Portugal, before the pandemic, it would take you, if you were an international buyer investing and buying in Portugal, easily take you 3 to 4 months to transact that business, which included personal visits. You had to go see the lawyer, you got to have a handshake, you got to do all that stuff. And we've been able to really shorten the cycle and go completely virtual, and that's clearly all enabled with technology. So it's advancing our ability to service our customers. I would also tell you that our member company in Greece has been really effective at selling properties that people never see in person. It's all virtual, and it's all based on security and investment. So they do their homework, they understand the market is a strong market, they understand the value is good, and technology that we share and information we share through that technology really enables these transactions to take place. So it's always back to the buyer and seller in the transaction, and as far as I'm concerned, we live in a world of abundance, not scarcity. And I think there's nothing but bright ahead, and technology is just going to help us get more effective at making those transactions happen.
Thank you. Now, going to Sorin, for what is your perspective? I mean, since you are a developer, how does a developer interact with technology, yeah? With digital, and there are a lot of, let's say, words lately that describe digital twin, PropTech, and so on. So many new things. How does a developer see the technology side, with its benefits and, of course, dangers, maybe?
Yeah, I think the technology is playing a crucial role in the history of our company. We've been always early adopters of technology because basically the DNA of this company is engineering. And we have always used softwares and hardwares to support our design and construction process. And I must say that I totally agree with him when saying that COVID-19 pandemic just accelerated the adoption of new technologies. And speaking of things that were accelerated by COVID-19, I remember that in 2020, in end of March, actually, lockdown was declared in Romania on 14th of March. And by end of March, we were already in the position to sign the first lease agreement with the client without ever seeing him or knowing in person. Yeah, and it was a big deal. So I remember that in only 2 weeks we have migrated every process related to sales, marketing, overall management of the company online. So that was a very good trigger for adopting faster technology. Technology based to virtual reality, to augmented reality. Out of all these technologies, I personally find one very interesting, digital twin. Because it's actually giving you an application on long term and is supporting the administration and is giving you a better predictability on the lifetime of your property. And I'm glad to say that we have also adopted this model of predictive maintenance, while we were used to have only preventive or corrective maintenance before. So again, a lot of technology is already there. However, we noticed in the past 2 years that there are also barriers in adopting technology or deploying applications technology-based. So we decided, and we already announced like a week ago, the appointment of Mariana Anghelache, who is here, We call him unofficially our AI trainer in our organization. And we announced his appointment and also the first two projects. One AI-based model, a platform supporting our management for everything related to ESG. ESG is like, if you wish, nobody maybe put it this way, but I believe it's like the new investment philosophy, the new investment Bible of developers and the investors in real estate, as will most probably give us access to cheaper capital, will give us probably the ground for building more credibility around the brands of our companies and so on. And I believe the features of this platform are focused on energy optimization, on the relationship with the tenants, on reporting, and last but not least, on social impact that our investments are producing in local communities. So I don't know how, but I don't know when. I know when this happened. Only in a month and a half, we speak more of technology in our group than ever before in 20 years. So I guess this is important, yeah.
Thank you. Selman, please.
Yes, especially what we do as founder of Red Awards, we host real estate events all over the country. And what I see, most of the new tech companies come to our platform and present their companies, whether it's an architectural company that does design and 3D modeling, or construction company that has this new product to make it more efficient to build. All of these companies looking to use that technology to make their product faster and cheaper. So it does definitely makes big difference.
Thank you. Fulga, your perspective on the digital transformation, on the technology in real estate.
Well, I'll give
everything related with technology.
Yes, I'll give you. You know me. I always see the full half of the glass. Just to give you an example, when I moved here in '96, I was corresponding with my friends and my family through letters sent through mail, post office. I still have at home stacks of letters because calling was very expensive across the ocean. And 2 days ago, I was able to complete a transaction from here of many tens of millions, sitting in New York, and it was signed in Bucharest. So that gives you, part of the answer. It simplifies our lives. I believe in it greatly. It comes with downturns. My daughter spends way too much time on Instagram, Generation Z being here with me for support. But we definitely, it helps us greatly with the reporting, with the correctness of our reports, with removing human error. Because, of course, reporting was there 20 years ago, but it was quite, I would say, precarious. Now you can generate reports that are meaningful and they are accurate due to technology and artificial intelligence. We map out our buildings. You can have much more accurate measurements, and you can have much more accurate building management systems that yield instead, efficiencies, and that further lead to this, environmental impact that we can reduce this way. So I'm a true believer in this. I think, as some of the previous panelists said, it's not going to result into jobs being lost, but people can retrain. It's like the Industrial Revolution. People panic that the end of the world is going to come because they're not going to carry things with their bags. But, you need to train, and you're going to be able to do it, and I think it's going to be more people. So I'm very optimistic generally, and if it's going to come out bad, I don't know, we cross that bridge when we get to it, but I don't think so. I really don't think so.
Thank you.
It's going to be bad, no.
Thank you. We are welcoming Mr. Craig Nassi. We'll come back to you in an instant. You can have a little sip of water. Until then, I will ask Beatrice to
I have to mention that either we like it or not, the digital transformation is happening. It started to happen a long time ago, before we have noticed, because it's like the web, like everybody said in the previous panels. What I know definitely sure is that most of our portfolio, it's housing. So what I know for sure is that we are not going to be put it aside by AI. Why? Because we are selling emotion. Before selling you're selling a house to someone, but the emotion comes first. Then the rationality, you accept that you have to buy, and you say, yes, I need money to buy this, and I can afford it, and I have to buy it because I want to. But in the first time, it's your emotion that decides what you are going to do. And moreover, as human beings, we are very social persons, and we need emotion. We need to interact. We need to take decisions through having someone in our face when we buy a house. So if, I don't know, the office spaces that we are developing can be sold, like Fulga said, in transaction that we take by phone because the digitalization helps us. When I'm selling a house, of course, I can sell a house to an investor or more houses to an investor, which is different. But if I want to buy it for my own, it's different. I need to talk to someone. So this is not going to happen to close all our deals because we are digital now.
Thank you. Oana?
So for sure, for me, digitalization means improving and easing the processes in which property is managed, property is controlled. We see so many people now, they want smart, eco-friendly houses, smart premises. They want to be able to control their AC system, their security systems, video cameras everywhere. But this is just supporting and the way you manage a property, the way it brings an yield on you, and it just preserves its value. And this also fits back into what I was saying earlier about sustainability, because building sustainably and owning a sustainable property naturally now comes hand in hand with having it digitalized.
Thank you. Craig, now I'm coming to you with our first question. Yes, it works. Everything's good. You are more than 30 years. You have more than 30 years experience in the real estate market. The first question was I ask every speaker to come with one trend that they consider important, the most important, about the landscape of tomorrow, the real estate landscape of tomorrow. Well, and explain, of course, that trend.
Sure. You know, I can speak more to New York City than anywhere else because I'm here and I feel it every day. Not just hear it, I feel it. Finance is a big impact on how real estate trends go forward. The high interest rates in the last couple of years has changed sales for us in commercial buildings in the city. What used to be a $100 million building could now be $50 million just because of interest rates. And the volume of sales of these kind of properties has slowed down so much because people can't figure out how to finance these deals with as much debt as possible. Now it has to be a lot of equity. So that's the one thing that I see in New York that's changed everything and has slowed down the market tremendously. Now that rates are coming down a little bit, you're starting to see people talk, but not a lot of action yet. But I think people are still waiting for the election, the presidential election in November, and then finally the new president will be in January, will make a big difference on the real estate market. I think it's going to go one way or another. So, and nobody really knows. That's the thing. Our presidential election is so close that nobody really knows who is going to be president. It's going to be a liberal ideology or a conservative, strong hand like Donald Trump. So we just don't know yet.
Should we expect new models of real estate financing?
Well, we're seeing it already. We're seeing a lot of equity funds that are popping up that are filling the gap of money above debt. So we're seeing a lot of groups that are starting from Wall Street or hedge funds, private money that are coming out and saying, you know, if you can only get a 60% or 50% loan, we're here to give you more money to take you to 80, 85%. Money's expensive, and these people want to be partners with you. So it's always a risk and a chance as to what the right thing to do is.
Now I'm going to ask open questions, so feel free to answer whenever you want. So our event is called Business Bridges. So the idea is about bridges from Bucharest to New York, and I'm asking you, I'm asking Michael actually, since you've mentioned Portugal and many countries that the company is present, what was let's say, the most important thing in building, because you've mentioned the idea of partnership. What's the most important ingredient in building relevant partnership that actually work?
Yeah, I think there are several things that we all probably would say. Trust. You've got to trust each other party. There's got to be transparency. You've got to have aligned goals. What are you trying to accomplish? There's got to be ways to measure the accomplishment of those goals. And frankly, to continue to iterate and refresh and update. The other thing is, usually there's some kind of expertise one of the parties brings or the other, whether it's a global branding name like Forbes Global Properties, or a local operator that's been in the market for 3 decades that understands how to transact and is well known. I'd say that's a pretty good start.
And are there any, let's say, do nots, any things that there are maybe forbidden to do?
Well, don't break the law. Understand where the money's coming from. And candidly, my own rule of thumb is trust your gut, and your head is always trying to talk you out of trusting your gut. Trust yourself, trust your instinct. It's a long road. A very famous business executive once said, it takes 20 years to build a relationship, takes about 5 minutes to destroy it. So always have the long view in mind, and no shortcuts.
Thank you. Any other opinion on building partnerships, especially in real estate?
Yeah, especially in real estate. I mean, if you're a foreigner that wants to bridge and you want to do something here, I mean, the best thing is to do all your research and find out which city is best for you, for your investments, and find that local partner. Just like what Craig said, I mean, he's been here for 30 years, and he knows in and out of New York City. And he knows how to build, he knows how to finance, he knows how to get the best deal. Find people that are really good at what they do in that local city, and should be fine after that.
I would say to what this gentleman was just saying, that, you know, there's a lot of groups out there, and if it sounds too good to be true, it's just talk. We see a lot of groups come to New York from the Middle East, Dubai, Qatar, this area, and they come and say 100%, we want to put 100% of the financing in place. We want to only be a X amount partner. It doesn't make sense. And you end up wasting time and talking to these people. Although they want to be in the market, they don't understand the market. So I guess we're lucky to have the internet today. That's the most important thing. You can get on the internet, you can research people, you can understand what they've done, what they've accomplished, what their relationships are. LinkedIn happens to be an amazing tool also. You know, you can't lie on LinkedIn. You know, LinkedIn shows how long you've been there, what you've done, what you've accomplished. So this is another thing. Social media lies, Instagram, Facebook, TikTok, all these things are garbage in business. But the one thing that really stands out that's kind of social is LinkedIn, and they're very firm. In fact, when we hire people now, we want to see their LinkedIn account. We want to see, you say this is your resume, that you say you went to Harvard, you went to Princeton, whatever. We want to see your LinkedIn. We want to understand how long it's been up and where you've been in the past. But with financial relationships, it's the same thing. You want to see their past, you want to see what they've done, what deals they've closed. You know.
Thank you. Beatrice?
I wanted to say that it's about the opportunity most of the time. I love my country. I love Romania. My skin doesn't help me, but I'm a Romanian 100%. So I know for sure that Romania is a country where you can invest a lot. It's an opportunity. Geopolitically, we are a very important country on the map right now. Bucharest, it's a beautiful city. Our country, it's a beautiful country. It has seaside. It has everything you want to have to stay there full year. Our pricing, it's very low on housing, for example. We are having small prices on apartments. We do have all the markets covered. There is a huge opportunity to develop because it's a country that needs infrastructure as well. It's a country where if you have expertise and of course you find a local partner, you can develop a lot. For example, just as a simple example regarding the housing, right now we have 3 persons trying to buy a single unit because there is no housing developed in Bucharest or in Romania. I think it's a huge opportunity to come there. It's a huge opportunity to invest in Romania because we do have other industries as well. But in real estate, I know for sure because I'm doing this for 20 years, that is a huge opportunity. So I'm inviting you all to come to invest there.
If I may add to, obviously, because I'm hugely in love with Romania and with my hometown, Bucharest, I think that we are at a huge advantage because we had nothing. Just to give you an example, the first modern shopping center just computed 25 years, 2 weeks ago or something like this. I think the Western standard, the first Western standard office building in Romania has about, no, I don't think it has even more, it has 20 years, maybe not. So we have good real estate, good quality assets because we just burned some stages. We came from the dark ages, you know, communism, Ceausescu, we had nothing. And then we got educated. A lot of people went abroad, they studied, they came back with the knowledge, and we implemented directly whatever, you know, in other countries it was like natural organic growth. We just had it nicely done from the beginning. So I was walking the other day through Hudson Yards. If I wouldn't look outside at the surroundings, you could swear you're in any of our malls. This is how they look. This is what and not only ours, I should be fair to the competition as well. I have some customers, some business partners here that have shops in our shopping centers, and I rarely see more beautiful shops than yours, Florin, to be honest. You can be anywhere on Fifth Avenue, just to give an example. So I think we don't market ourselves enough. That's why I was very keen to come to this conference, because we have a lot to offer. We are professional. Of course, we have crooks. They are everywhere. You need to know who you're dealing with. No, it's true, it's everywhere. But if you get to know the right people, I love they are not competitors really, but we, it's a very nice, now it's become a professional market, the real estate market, with people that are very well prepared, that understand the business, that know finances. I've done transactions here. I also used to work for JP Morgan, by the way. And I've done the same, not the same size, but the same quality and complicated and intricate transactions that I used to do here on Wall Street, I've done in Romania. So it's pretty much the same thing. So yeah, just to add a bit to what Beatrice had to say.
And looking more holistically from an investor's perspective, yes, you always look at the opportunity of a jurisdiction, but you also need to understand the country risk. And as Romania has joined the NATO, entered the European Union, we are one step in Schengen. Hopefully next year we'll be with 2 steps in the relationship with the States. Visa waiver, it's also a tiny bit away. Romania made a lot of progress in that respect as well. 2026 is going to be the year when the country should also be accepted to the OECD, which will be an awesomely important white check for the validity of investing and of retaining value of investment in the jurisdiction. Also, looking across the real estate market, we see that there is a lot of untapped potential on the logistics and infrastructure side. And also, actually, this is based on a very recent discussion that I had in DC, real estate related to the defense sector, because like it or not, Romania is at the limit of a conflict area. But being a NATO member state country and a country where the American military presence is so important for the entire Central and Eastern European flank, developing real estate for the defense sector could become a new gate of development and a new gate of bringing in affluence in the country.
Thank you.
You know, I must say that speaking of building partnerships, that I was very lucky because I started 20 years ago, this family business with no capital. So I had to put up the foundation of our business, the idea of building partnerships. And I totally agree with Michael. Building partnerships means basically loyalty, trust, reliability. And it's much easier when you do that from the very beginning. In 20 years from 10,000 euro, if I'm not wrong, the first capital that we attracted in one very small investment, to approximately $500 million, what we have done in the past 5 years as a real estate development portfolio in industrial and logistics. It was a huge step for us. But now, because it's so deeply rooted in who we are, I believe we only have great chances to restart this process, this time differently. I'm totally convinced that this market is actually pushing us even more to building partnerships and bridges because of two types of risks. One is geopolitical risk, and we see it every day for already 4 years, I guess. The other one is political instability. Everybody is asking, where is the United States going to? We have the same questions, philosophical questions in Romania and in Europe, with all this hyperloop of elections all over the world. And what we are speaking now with the investors is actually the idea of building this type of bridges not only locally, but globally. Because I believe when you have to navigate this type of uncertainties, and to me, honestly, in these 20 years, I think we live in the highest level of uncertainty today. So from my perspective, the value proposition that we are discussing with our investors is the idea of having a well-balanced portfolio, to place capital in established markets and in emerging markets as well, and to follow this idea of differentiating your portfolio all the time by following this idea of integrating more than real estate in your investment portfolio. So this is where we are, and to be very honest, I'm very happy that we did it so.
And building on this idea of established markets versus emerging markets, and that's an open question. How do you see the risk at this time being the risk and the opportunities? Let's talk about US, let's talk about New York specifically, the risk and opportunities. Let's talk about Romania, let's talk about, I don't know, usually Central Eastern Europe. How do you see it? And even Portugal, why not?
Yeah, again, I see the idea of investing in this sense of sharing risks. It's given automatically by the idea of having a partner, of addressing with investments both markets or both type of markets, and adjacent or convergent fields like I said, technology and energy. Definitely, you cannot eliminate those type of risks that are 100% out of our control. So I think we are all guilty of wishful thinking. I have friends, and I mean friends like bankers, investment bankers, that were telling me in February 2022 that this war in Ukraine will end in 5 days. I said, okay, let's sit and wait 5 days, 5 months. We are approaching 5 years in 1 year and a half. So I think you always need a kind of contingency plan. And this is actually about financial education and about how you distribute your capital, how you make reserves, and how you develop even more this type of partnerships with other financial partners. And yeah, that's it in a few words.
Please, other opinions?
Yeah. When you think about emerging markets or maybe more mature markets, I think there are a couple of things that you have to evaluate. One is what I might describe as the macro. So the macro would be, let's say, at the country level, what's stability, what's security, what's the future look like, perhaps politically, as stable or unstable as you can determine. But then I think you quickly have to look at the specific or the micro of what is the specific opportunity you're looking at. Once you've satisfied the macro, then you've still got to do your due diligence on whatever kind of specific property or project you're going to evaluate. And there's so much out there. I mean, there's a huge project right now that we're working on in Greece, and they've had great velocity of sales, and 65% of their sales are coming from US buyers, shocking even the Greeks. At the same time, we've got projects that are going on in places like Portugal where, you know, the traditional buyers are still the dominant buyers, which are UK and Ireland, and there's an opportunity to tell the rest of the world. But for the discerning buyer and investment, it's all about, and when we think about property and we think about the strata of where we do business, high net worth, ultra high net worth buyers and sellers, they're not buying a home. They're buying a property. A property is an asset class. A property is an investment. They're looking for trusted, valued advice. So we really have to understand both. What's the broader environment and what's the specific property or opportunity that they're looking at?
Thank you. Craig?
Yeah, to piggyback on what he's saying, in New York, there's certain products to touch and there's certain products not to touch right now. You know, funny enough, the high-end residential market, you know, if you want to buy a townhome that, you know, in the past you would see these Russian oligarchs buy for $50 million or $40 million on the what we call the Gold Coast of New York's best real estate, Fifth Avenue, from the 60s to the 90s on Central Park on Fifth Avenue. That product, one block into Madison, is still doing great. You know, if you have a $50 million or $30 million townhouse that's turnkey, finished, ready to go, there's buyers all over the world that are coming in daily looking for that product. But again, it's very limited. One of the best products right now to buy in New York as an investor is office product. So a tremendous amount of office buildings in New York City. We have millions and millions of square feet of office product that is going to be vacant and not filled again because of the live-at-home concept, work-at-home, live-at-home concept that started very strong at COVID, but it also carried on since COVID, where a lot of people just protested and said, I don't want to go back to work 5 days. I do better working at home. Give me at least 2 days at home. So that concept is carried forward, and we have a lack of, we don't have the need anymore of a lot of office space. So we're seeing a lot of big companies giving up office space, sitting vacant. Landlords have to go refinance. Some of them, they can't refinance, they have to walk away. A lot of banks are taking these buildings and selling them now quietly. And we believe in the next year there's going to be a flood of them. So that's a great investment. And these were products that were selling for $800-900 a square foot 10 years ago. And today they're trading, even last week we saw two trade for about $250 a square foot. So it's a big, big difference. So that's the opportunity in New York right now. So what do you do with these buildings? Residential. The most obvious conversion is from office to residential. It's not easy. There's a lot of intricacies. You got to change the floor plates. You got to change the egress. A lot of code issues, but it's doable. And that's one of the things we're focusing on too, is an investment. So every city's different.
Thank you. Other perspective on the risk versus opportunities?
Well, yeah, when I started my speech, we obviously after COVID, there was also in Romania this work from home thing. Now it's getting much better because at least in our portfolio, we have 75% attendance, which is great. The 25 that's driving us down, it's mainly from the American companies. which are tech and financial services. It's something about the American companies. No, in truth, now they have this policy. They have this policy of working from home. But people in Bucharest and in Romania in general, they wanted to go back to work. Yeah, they wanted to physically go back to work. But in those days, in those months after the restrictions were lifted, we converted buildings into hospitals. We found this niche. In Romania, the public health system is not that great. There is huge room for private hospitals and clinics. So we converted 2 of our buildings into hospitals, and it's doing great. You have over 25-year leases with great prices. There isn't any business better than this. So, yeah, I mean, you have to look, because we tried, I think you're doing a conversion into apartments. We looked into that and we didn't do it because we're not experts also in residential, but there are others that do that as well.
What is interesting, because it's a young market in Romania, that it's a very young market. For example, in Romania, the reconversions are moving slow. Why? Because we are not used to them. We are not used to them. It's a country where it's a lot of land to build new. It's a country where everybody is doing refurbishment, and we are taking care of the old city. So we are way ahead. So it's a great opportunity to come to Romania and to invest. And getting back to the reconversion, we are doing this on an office building right now. It's getting better because it took us a year to teach our clients, to make them will to buy this type of properties, because they were like, oh, come on, I need something new. Because Romanians were born to be owners. More than 95% of Romanians are owners. More than 95%. So it's a market that everybody wants to be owner. But what happens right now is that because we are not building that much as is needed on the market, the market started to grow. So this is the reason why a lot of investors coming from other countries in Europe, in the Eastern Europe, where they don't have what to buy because they are more ahead of us, they are coming to buy 500, 1,000 apartments. They are raising portfolios to put them on the market and to rent them. Why? Because the new generations are not that willing to be owners. They accept to rent. So the new market is coming. So the investors, they know that we are going there because they did that before us. So it's a very interesting market. Yeah, huge opportunities.
Thank you. Any other inputs on risk versus opportunities? No? Then I would like to ask you something about, I was yesterday at the High Line, and it was, I'm interested in seeing in learning your opinion about revitalizing old projects, old situation. How is it? Since in Romania we have a lot of, let's say, greenfield. There's no need for the time being to reconvert the specific zone. But how is it in New York, in US? Because it's a few steps ahead of Romania, right? I mean,
yeah, I think it's the New York is really a leader in the arts, and the High Line was able to take an old historic elevated train and convert it into not only a park but art exhibits. So there's a lot of art there. There's a lot to see, and when you market it correctly on social media, you really bring a lot of different type of people. People that want outdoors to exercise, people that want to see art, and people that want to take a nice tour from the meatpacking district all the way up 20-some blocks, and it's just it goes so quick because there's so much to see. And it's just a brilliant idea. It was a brilliant idea, and nobody ever thought it would be that successful. And every year it gets more and more successful because they have more artists and they have more installations and food on the way. There's great restaurants here and there you could stop at. So you have to have the artistic twist behind it.
Yeah, but is it good also for the real estate? I mean, for the real estate in the neighborhood, right?
I forgot to say. I mean, the buildings that have been built on the High Line are the most prestigious at this point. They've done some amazing condominium projects and rental projects. they're just outstanding. You know, you get great views and you have greenery, because most of the elevated train tracks, if you haven't been yet, you need to go down there and see it immediately. It's just beautiful. It's a park. It's like living on a park.
Thank you. One other thing what I want to ask you is about, we are talking about a lot about real estate portfolios, yes? But on the one hand, we have also in US, but of course everywhere in the world, a very inflation, with big inflation, yeah, right? I mean, how does real estate investment in New York, and how does real estate investment in Romania goes with, and usually emerging markets, yeah, right? Do they, I mean, what are the do's and don'ts in let's say in a situation like with big inflation, and what are your recommendations?
I think real estate has been always a good hedge against inflation, because it's giving you, if you structure properly a lease agreement with a tenant, then you have the right to index the rent, and this is actually the main hedge against that inflation we are talking about. Now, if it's enough or not, it's questionable, because it depends on the yield on cost that you achieve when you sell, when you buy, basically. So you have to take care of that ratio when you buy a property. But again, with a proper due diligence process in place, and with a proper asset and property management structure in place, real estate is one of the best solutions against inflation.
I would add to that just a couple thoughts. Warren Buffett once said that if he could spend all of his money on buying houses, he would, but he hasn't found an efficient way to deploy $120 billion. That's how anchored in he is. At the same time, and we've seen the trend, I think, led by a lot of the New York private equity firms, they're buying tens of thousands of houses. Why? Long-term investment. I think it's clear if you look at the trend of those who know how to invest, property is a very safe place to be.
I've done an internship for some high school students, and I was like, these guys have no idea what real estate is. I mean, they have houses, but more than that, they have no clue. So I put together a presentation, and I showed them on the first slide a picture from the Roman ruins with Traiani Mercati, the first, let's say, still existent shopping centers, multi-level shopping center, multi-leveled in Rome. And I said, guys, look, this is where the Romans we used to go and meet like you guys go to Starbucks today. This was 2,000 years ago. And they started getting into real estate. I explained to them with so much love for this business, because you need to understand it, and you need to understand it's a long-term business. You need to have patience. And it's going to pay you back. I've never heard of somebody with patience and with the right state of mind and investment that didn't earn from real estate. So this is my optimist tone about real estate.
Okay, so since we only have a few minutes, I would like for each of you to leave us with leave the audience with a thought, with something that I didn't cover. Maybe we will start with Craig, since the last to arrive. We don't want him to have too much thought time.
So the question is focused on my thoughts about the current state or the future, or
whatever you consider relevant for the audience and we didn't cover already.
Gotcha. To reiterate what I said earlier, this year is a very interesting year because of the presidential election, and really it's not a giveaway. Nobody really knows who's going to win at this point. So the future of our country is in limbo a little bit for the next couple of months. Once it's figured out who is going to be the president, I think it's going to change a lot of policy and a lot of direction of how business owners, business people, the economy, interest rates will go. And right now, I think the safest thing possible is real estate investment. I think owning an office building in Manhattan, if you could buy it today at, say, $250, $300 a square foot, is the same building that was selling for $800 a square foot 10 years ago, just makes sense. New York, historically, the worst of the worst recessions we've had, the last big one back in 2008, 9, 10, we saw values drop about 30%, 35%. Those values have come back today to where they were and better, and in some cases, exponentially better. But we've never gone to a low and never come back to it. So I think New York is a very strong market to invest in. It's an island. Manhattan is an island. You know, the other 5 boroughs the other 4 boroughs are fine, but Manhattan in itself is an island. You can't really expand past where it is. It's a very hard market to break into unless you have a partner and someone who understands the market. And the values will always be there. It's the capital of many things, you know, fashion, finance. And it's a very important city, and young people love this city. We see, you look around the streets of New York any given day, it's all young people. I used to ask my dad, I said, where are the old people? He said, they're inside their apartments. They don't come out. But it's a city of young vibrance. Young people love the city, and that hasn't changed, and I don't think it ever will. It's a great city.
Thank you. Michael?
Yeah, you know, there's so many interesting things across the industry and across the world. In fact, our writers spend a lot of time writing great insight and stories about it. One of the things that I found most fascinating was what we learned over the last few months. Many of the super affluent or the ultra high net worth are building what I would call safety camps. I think Zuckerberg has bought 1,000 acres in Hawaii. On that property, he's building, you know, 12 homes, a hospital, a school. I mean, so he's waiting for the next whatever's going to happen and go lock down. Many billionaires are buying camps in New Zealand, which are, you know, hundreds of acres large. So it's interesting where some of the real big money is going in terms of setting up a refuge, expecting another pandemic or, frankly, worse. So there are lots of trends out there, and it's just kind of fun to take a look at them.
Thank you. Sorin?
I have 2 closing remarks. One is a general one, not related necessarily to real estate industry, and is related to the idea of education. I think because we all go through transformational change, the base to me remains the idea of perpetual education. Now I think ChatGPT has the whole knowledge and the whole know-how in the world. We just have to learn how to ask questions, which is much more important than to learn a specific thing and how to do it. And the second remark is related to real estate. As we are going through a very turbulent period, I believe in that idea of following a well-balanced strategy when investing and when selecting assets to invest in, and the idea of building bridges, because that was the theme of the panel, and I think this is so valuable these days.
Thank you. Selman, please.
Basically, I mean, what I think is the real estate is about who you know, and as the founder of Red Awards, we bring people together. We bring the right people together and make them feel comfortable about doing business themselves. Like I know Craig for more than 10 years, I think, and he came to our events before, and we do a lot of introductions to each other. And that's because you just don't know who that person is until you see them in person and ask them, like, you know, if they're really good at what they do. I mean, one time I was in Romania, somehow one of our sponsors asked us to do events, and been in Bucharest twice. We were about to host a blockchain event. And because of COVID, we couldn't do it. But I've seen the city, and I see how dynamic it is, how it is growing really fast. I didn't know until I get there. So it's about who you know in real estate and who you trust, who you work with, and it's timing as well. Timing is important as well. That's what I want to say.
Thank you. Fulga?
Thanks. I'm going to conclude also based on the two pillars, which are sort of the symbol of this gathering. I think that any idea, especially after seeing the Hudson Yards area that I remember 20 years ago you wouldn't set foot into, honestly, and the High Line and so on, you can come to New York and get 200 ideas every 2 blocks about what you can do in terms of real estate. I think it's such, it's food for business, food for thought. It's amazing, and I love the city. And at the same time, I think that at the other end of the spectrum, Romania has a lot to offer, and Americans and New Yorkers should also look into that direction, not only the other way around. So this is how I conclude the building of this bridge. Thanks.
Okay. So it goes both ways, right?
I have to say that I strongly believe the same. Only the fact that we are here today discussing about this building bridges, it's a fact that we are going to get somewhere and we are going to do something together. Thank you.
Yeah.
Thank you.
Absolutely. I think that the joint expectations as well as the similarities that bring us together are much more stronger than anything else, and the things that set us apart. And tapping into the potential of a country still unexplored as Romania is, it's a great venue for opportunity for everybody.